Thank you very much. It's great to be here, and I should apologize immediately for the fact that I am a typical useless English person who cannot speak any languages. So I have been coming to Colombia for many years, and I have learnt no Spanish. So I'm really sorry. I'm going to have to talk to you in English. It's great to be here in Cali. This is my first time here, and it is really fantastic to see so many people at this conference. If this was London, there would be about 25 old people like me falling asleep in the back row, so it's great to see so many of you here. And also a quick thanks to Elvis and the team for sorting out the presentation. So, Insurtech, which is one of the hottest topics in the insurance industry right now. It's very exciting, and it's actually really important for society that Insurtech works, because it's a really important way of getting more insurance coverage, more insurance products bought by more people, which is good for the economy, it's good for society. And this is what Insurtech is really about, delivering products easily and delivering products that people want at an affordable price. So, my simple definition of Insurtech is it just means the use of technology in insurance transactions. And what I'm going to focus on in the next 38 minutes and 35 seconds is the regulatory challenges. So, great. Okay. So this is going to be really confusing. So I can see it in English. I'm talking to you in English, and you're going to read it in Spanish. So, so these are the issues that I'm going to cover. And I think if you said to me, Nick, what's the single biggest issue in Insurtech right now for companies and regulators? It's definitely about data protection, cyber security. So we're going to come back to those issues, but that's the big issue. But Insurtech is a huge topic. Insurtech is absolutely everywhere. You can't escape it. He's rich enough to own Insurtech companies, but it's not actually a picture of Lionel Messi. It's a picture of the Barca shirt and the sponsor, okay? Rakuten. Rakuten is the Amazon of Japan. It is enormous, and it's expanding internationally. And a few months ago, Rakuten bought a traditional insurance company for 45 billion yen called Asahi. And this is probably the most significant event that we've seen in Insurtech, because this is an e-commerce giant coming into the insurance space. And if there's one thing that keeps UK insurance CEOs up at night, it's worrying about what Amazon might do in the insurance space. So it will be very interesting to see what happens with Rakuten. So this slide is probably quite hard to see, and I've got lots of slides, and if I spent time talking about every one, I'd be here until this afternoon. So you'll get the slides later, so I'm going to quickly flick through some of them. But the purpose of this slide, which comes from Ernst & Young, is just to explain where we're seeing the use of Insurtech at the moment. And it's really in four segments. We're seeing it in administration, blockchain. We're seeing it in development of new products, but mainly limited to health, auto or motor, and home. They're the main areas. And we're seeing developments in distribution and in customer services. So they're the main four segments. And in terms of where the startup activity is, you'll see from that slide that it's overwhelmingly in the States. 56% of new startups are in the States. But again, most opportunities in Insurtech startups are focused on auto and homeowners. So very traditional insurance areas. It's overwhelmingly focused on retail insurance, so selling to individual consumers, and it's strongly focused on improving distribution. How can we sell insurance more quickly, more easily to more people? So this is what Insurtech is about. And what we're seeing in the UK and in Europe is that it's having a dynamic effect on the market already. If we could have the next slide. And what we're seeing is collaboration between existing insurers and Insurtech startups. So we're seeing IT guys collaborating with established companies to produce new products. And I'll show you a few examples in a minute. So we're seeing an impact on products, particularly with the use of new technology, seeing a huge impact on distribution. So we're seeing incredible advances in mobile technology. We're in the UK and in Europe, we're seeing agents really being cut out of the market. So for retail, it is increasingly direct business, direct from the insurer to the consumer through mobile technology. It's also impacting underwriting, and that's something that I'm going to come back to. And it's having an effect on administration and claims. So I think you're all familiar with Lemonade and the famous example of the guy in New York who lost his Canada Goose coat. And so he dialed up the claims line on his iPhone, and he explained to Lemonade what had happened, and talking to a machine. And within 3 seconds, Lemonade had run 18 anti-fraud algorithms and transferred the money to his bank account. So he had his $947 in 3 seconds. That's pretty exceptional, and I kind of think it was an example that they sort of constructed maybe to show how quickly they could do it. But that's the kind of dynamic effect that Insurtech is having on the market. What I just wanted to do was just to give you, so we're all on the same playing field and the same level of understanding. Before I talk about some of the regulatory challenges, I just wanted to give you 4 examples of typical Insurtech products that we're seeing. So this first one, the first rule of Insurtech is that you have to have a crazy name. So you cannot have a name that does anything to do with insurance. It has to be a crazy name. So this is called Kuva. And what some IT guys decided was that for people who live in cities, don't need to own a car, it would be really useful to be able to borrow a friend's car or a parent's car. But how do you get insurance? Well, you go onto Kuva and you can buy motor insurance for an hour, by the week. You can have a monthly subscription, pay as you go. So pay as you go is a key feature of Insurtech. And this is just a standard motor policy. Kuva is just an app, and the insurance behind it is provided by real insurance companies who are on a panel, and they just issue standard motor policies. This one is called Flock. And this is for drone insurance. So if you like flying drones, whether as for a hobby or for business, you can go onto this app and you can buy insurance. And it's got some really clever features. So when you log on, you have to say where you're going to fly. And what the app will say to you is, ooh, we don't like the fact that you're flying near high trees or you're near an airport. So if you want a lower price for your insurance, we suggest you go and fly your drone over here. And then it picks up the weather. So it says, you're flying your drone for 2 hours. We think there's going to be heavy rain shortly. So if you want to fly, you're going to get an increased premium because of bad weather. So again, very interesting technology. But you can see who the insurer is. Allianz. Allianz. So again, it's an app by some clever guys who can do the IT, but the real money is coming from an established insurer. Then the next one, Fizzy. Fizzy, okay. Now Fizzy is interesting because you can see it's AXA. Only this is no startup, guys. This is AXA developing Fizzy itself. So this is AXA's own team developing this app. And it hits, it's simple. It's flight delay insurance. If your flight is delayed for more than 2 hours, you get your money back. But if you can read on there, it hits 3 key Insurtech buzzwords. It's an app, it's blockchain, and it's a smart contract. But it's actually a very simple one. If your plane's late, you get your money. And then the last one I wanted to mention is actually probably the most interesting. And this actually is from Malaysia, and it's a fairly standard health insurance app. And what it says is, if you do things like stop smoking, we'll charge you less premium. Nothing unusual about that. What it says, we'll give you reductions on gym membership. Nothing very interesting about that. We'll give you reductions on a Fitbit. Nothing very interesting on that. What is interesting is they say, if you sync your Fitbit to our server, we will give you much more in terms of rewards. But just think how much data AIA are getting from having the Fitbit. All your movements are going into their server, so giving them incredible access to data. So I'm now going to just think about some of the regulatory issues. The first issue that we see quite a lot is, are products actually insurance? And is the app carrying out a regulated activity? And that's where Sandbox comes into play. And we've seen some really difficult questions about whether some life insurance Insurtech products are actually insurance or are they investment products, more banking products. So some very, very interesting regulatory issues there. And then also, I must just mention my all-time favorite digital insurer, which is an insurer called ZhongAn in China, purely digital. And it has a reputation for introducing some crazy products. So one of their products was, you could take out a product so that if the temperature got more than 37 degrees, you would get an insurance payment. For what? For what? And the Chinese regulator came along after they'd sold a lot of these policies and said, no, that's not insurance. And then they had another one during the 2014 World Cup. And the product was called Watching Football and Drinking Too Much Alcohol. And so for $1, you would get cover for 30 days, and if you had to go to hospital because you drank too much alcohol, they would pay your fees. And the Chinese regulator said, no, after they solved numbers, that's just silly. That's not insurance. Stop it. But Zhang'an is phenomenal. Their flagship product is, if you buy on the internet and you think you might have to send the goods back, for 35 cents, you can take insurance, and they will pay the cost of returning the goods. And on Singles Day, which is a big internet shopping day in China last November, Zhong'an sold 100 million policies in one day. Can you imagine? 100 million policies in one day. So this is Insurtech in China on a scale that is out of this world. You know, we do not see anything like it in Europe. It's always interesting to know what the academics are thinking. So there's been a very interesting study by some professors at the University of St. Gallen in Switzerland. And what they've said about where we are with Insurtech is the pace of growth is relentless, but it's mainly about distribution at the moment. It is mainly about figuring out how to sell existing insurance products to more people, more simply, more cheaply. And you'll see, bullet point 3, no game-changing developments yet. And that's because we're seeing collaboration and cooperation between insurtechs and traditional insurers. But, see the last bullet point, they say, who knows what the future holds? And it's conceivable that we could see a breakup. This is a long slide, and I'm not going to go through it because there's so much more I want to tell you in the next 22 minutes and 58 seconds. But one thought for regulators is this, and this is a big society point, which is we all know that the concept of insurance is about mutuality. It's about the principle of solidarity. That the reason why insurers can offer compulsory motor insurance is because we have a big pool of risks. And some people may pay more, some people pay less, but everyone can be covered, and you take the good with the bad. So it's that mutuality. Insurtech is about completely the opposite. Insurtech is about being very specific, very detailed, breaking down into particular segments. And so the question is, does Insurtech risk leaving higher risk customers uninsured? So is there a danger that we could create a situation where we have a whole group of uninsurables? So that's a philosophical point that I just throw out there, but it's something that's certainly being debated at the moment. So where are we now in terms of what are regulators thinking about Insurtech? Well, there's a very serious focus on cybersecurity. That's top of the regulators' lists in Europe and in the US. There's actually been very little development on the regulatory front in relation to Insurtech, apart from sandboxes. What we have is we have national regulation still. We have no international standard setting. We have very little, where we have no real cross-border collaboration about Insurtech, because every regulator is looking to promote Insurtech in their own country. And so we're getting countries trying to compete to attract Insurtech startups to come to their country and they will give more friendly regulation, be more helpful support. So it's what we call regulatory arbitrage. We seem to have lost it. If we could go on to the next slide. So the current approach to regulation of Insurtech is that in the UK and Europe, regulators are completely neutral about the kind of technology. So no one is trying to regulate the kind of technology. What the regulators are focused on are what are the outcomes for consumers? Are consumers being protected? So what is the claims experience? What is the pricing for these Insurtech products? Are there particular classes of consumer who are being excluded from products? So these are the issues that regulators are looking at. And they're also very focused on operational risks for the insurer. And this is a very detailed slide that I'm going to skip over. But what it does is it looks on the top line. It takes you through each stage of the underwriting process from producing the product through to the claims process. And it identifies all of the different technologies. And then along the bottom, it explains the legal risks and challenges that they present. So what I'm going to do now is I'm just going to talk about what are the issues for regulators in looking at Insurtech. And actually, there are also issues for the companies, particularly issues for legal and compliance. And it focuses around three things. Obviously, customer protection, data, and infrastructure. So starting with the first, protecting customers. The first point is the most important one, and I'm going to come back to that in a minute. The first point is actually quite scary. The second one is all of this big data. So insurers are getting access, can get access through the Internet of Things, through telematics, to how you drive, where you shop, internet searches, all of this huge information. And the UK regulator, the Financial Conduct Authority, got worried about this and investigated in 2015 to see whether there was a danger that all of this data in relation to motor and household could be impacting how the market was operating, and whether it was causing concerns about risk segmentation, so that some people could get good cover, but other people were being excluded, and also whether it was affecting pricing. And what the UK regulator concluded was that while there were concerns, there was no evidence that the market was being adversely affected. So that's a positive conclusion, but it's something that certainly the UK regulator is keeping under review. The next issue is what impact does Insurtech have on competition? And you'd think it must be a good thing because it's allowing new products, new people to come into the market. There's also the other view, which is actually the amount of technology and the amount of IT infrastructure that you need is excluding new entrants into the market because they can't compete with the established or insurance companies who already have that huge IT infrastructure. I think the most interesting thing is actually whether all of this information is making prices cheaper. So let me give you an example. There's a new startup in motor insurer in Switzerland. And in Switzerland, a lot of motor insurance is bought off comparison sites, off aggregation sites. And it's a bunch of computer geeks who have got these algorithms that whenever someone goes onto the site and wants to buy motor insurance, if they want to provide a quote, in 0.2 seconds, they will come up with a price that is designed to be 5 cents cheaper than anyone else. And so what the risk is that with all of this information, what's happening is that the pricing can come in the middle. So you get everyone pricing around the same range, whereas at the moment, you get a much broader band of pricing. So it's another issue for regulators, the things people are worrying about. Is Insurtech in a competitive market really going to see a reduction in pricing? Last point I want to make is that obviously one of the most important things, particularly in the life and health space, is what about information using gene coding? And what about people who, if they're tested, will have a gene that means that they're going to contract a serious disease, Huntington's disease or something like that? In the UK, we have a voluntary agreement that with the government that insurers won't use that information, that you can't be forced to have predictive gene testing. And if you have a test, you don't have to tell your insurer. So that's voluntary, but that's going to be a really important issue as we get more and more data and insurers want to know more and more about individuals. So that's something that we need to be careful about. I was at a conference, a 2-day conference, talking about Insurtech, and there was a regulator there, and he was asked, what is the one thing about Insurtech that keeps you awake at night? And he said, easy. How do you regulate algorithms? So this is Professor Stephen Hawking, the famous scientist. And what he said about artificial intelligence was it could be the biggest event or the worst, and we could be helped by artificial intelligence or conceivably destroyed by it. In fairness, I don't think he was talking about Insurtech. I think he was talking about nuclear weapons. But this is real, that what we are seeing now is machine learning. So computers can code themselves. Computers can create better codes than humans. So Microsoft and Cambridge University are working on something called Deep Coder. And what Deep Coder means is that someone can describe to the computer the program that they want to write, and the computer then goes off and finds the code from other sources, and the computer writes the code. So the code isn't written by a human. And why is it important? Well, it's really important in the insurance context that artificial intelligence, that coding, that algorithms can go wrong. And so I would say this is one of two main concerns. So we have data protection. The other principal concern about Insurtech, both for regulators and for companies, is how do we ensure that there's no discrimination and unfair bias built into the algorithms. It's a question that's been raised and discussed in the UK Parliament, and so there's a well-known politician there who asked the question, how do we know in the future when an insurance policy is refused, there is no bias in the system? It must be transparent and explainable. And the problem is that coders are human, and they have their own biases, and also we all have unconscious biases. I like to think at my age, I'm very conscious of my biases, And actually, I'm pretty comfortable with them now. But it's not just about, could there be racial discrimination? We know when fraud algorithms are being run to check whether insurance claims are valid, information that big data shows is relevant is statistically divorced people are more likely to make a travel insurance claim. People with more than 3 children are more likely to make a travel insurance claim. People who fill in forms, online forms, applying for insurance or making a claim, and who fill in the form always in capital letters, big data says they're statistically more likely to make a claim. But are these relevant factors? Are these unfair discrimination points? Should they be included in algorithms? These are the questions, not just for regulators, but mainly for the companies, and particularly for compliance, to understand. And so it's not just a problem, obviously, for insurance. It's a problem for lots of other industries. Some American authors have suggested that maybe a solution is that we need new professionals, kind of like actuaries. We need algorithmists, and these are independent people whose job it is to understand and check that algorithms are working fairly, and they're people to whom the insurer will have to open up its black box and explain to them in detail how the algorithm works. So, data challenges. So this is the second of my 3 topics. And what I want to move on to is the 2 big challenges. The first, obviously, is cybersecurity. We're all paranoid about cybersecurity. As a law firm, we are terrified of having a data breach. There have been lots of law firms who've had these data breaches, and it's been all over the papers, not just the Panama Papers, but there was a very respectable and well-known firm in Bermuda who got hacked, and all of their confidential client information. So it's horrendous. And so in the insurance context, there are lots of regulatory initiatives, both in the States and in the UK. What I've put on the slides, which you'll be able to read, is the UK FCA's very, very careful, segmented, broken down approach to its expectations of UK insurers and the steps they must take to do their very best to maintain data against cyber attack. But more interesting for today is the second one, which is about data protection rather than cyber security. So I'm going to click through the slides on cyber security and go on to data protection. I have to confess that I find data protection one of the most dull topics ever. But it's really, really important. And I'm just glad that other people do data protection, not me. But data protection is really important, obviously, and it's very topical because across the whole of the European Union, on Friday the 25th of May, we implemented the new GDPR, the General Data Protection Regulation. I think, certainly in Europe, over the last 3 weeks, 50% of emails have been from people saying to us, the GDPR has just been introduced. Do you want to stay on our mailing list? Please click yes. Or please don't forget us. Please can we still contact you? So emails have been completely clogged up. But the GDPR is hugely important in the Insurtech context. And this is for sort of the 5 reasons I've got here. The first is it's really, really complicated in an Insurtech context, and particularly when you involve blockchain, to figure out who's got the responsibilities for protecting the data. You know, who's the data processor, who's the data controller. So who's got the liabilities, who's got the responsibilities. Really, really difficult. But the next point is even more important, which is the whole purpose of data protection is to say to companies, I give you my data, and I agree that you can use it for a particular purpose. What Insurtech and big data is about is, give me your data, and then I'm going to use it however I want, and I'm going to do all sorts of clever things with it, and I'm going to try and figure out if I can sell you new products. Can I find something that means I can offer you a different pricing? Can I put your data together in a different way with other people? So you have this tension between consenting to the use of your data for a particular purpose and Insurtech, which depends on having lots of data which it can analyze and use for all sorts of different purposes. So some really interesting issues there about consent and how do you get the consent of consumers to use their data as you want. The next point is that what the GDPR says, and I might just click on, what it says is that you have a right as an individual not to be subject to a decision based solely on an automated process. Okay? So you have a right for a decision about whether you can get insurance not to be based solely on an algorithm. How does that fit with Insurtech? And what you have a right, if you see in number 3, you have a right to obtain human intervention. So you can ask a human being at the insurer to explain the decision that's been made about refusing you a cover or not paying your claim. And then if we just go back to Article 15, you see at the bottom here, the insurance company has to provide meaningful information about the logic involved. Now that is, I can tell you, completely terrifying to Insurtechs because their black box is the business. So there is no way they want to open up the black box and explain how their algorithms work. But for insurance companies, for compliance, making sure that that human explanation of algorithms is available as required by the GDPR is going to be very, very challenging, and it's very significant. The last point is that in Europe, you have the right to be forgotten. So information that is out there on the internet about you, you have the right to tell Google to take it down in certain circumstances. And that right is built into the GDPR. It says once you've given your data, and once that data has been used for that particular purpose, then the insurer no longer has the right to it. So that's another challenge, but what it's really hard to reconcile is how does that right to be forgotten exist with blockchain? Because blockchain is supposed to be immutable, unchangeable, forever. No one can alter it. So the GDPR is presenting a lot of challenges in the Insurtech context. So I am now, in my last 55 seconds, going to deal with my final 2 points. One is that regulators are obviously very focused in the UK on regulating the resilience of Insurtech systems. and the logic of the systems, and making sure that appropriate safeguards are in place. So that's plainly an obvious thing to regulate, and it's the focus of a lot of attention. So just to wrap up, what are the expected areas in the coming months and years that we see for regulatory focus and concern about Insurtech in Europe? Well, as I've said, there's going to be a much greater focus on outcomes to make sure that Insurtech is producing fair results for customers, for consumers. And insurers are going to have to be very careful to carry out high-level reviews, we think, to make sure that we're not seeing classes of people excluded from Insurtech products, and that groups of uninsurables are not being created. That's going to be clearly a focus of regulatory attention. As I've talked about, explainability of algorithms, the need for processes to include a human review, human intervention, great focus on managing data and making sure there's resilient infrastructure. And then just the last point is that there is a huge ethical dimension to a lot of these products, and to the way in which Insurtech operates with its focus on the individual. And how should data be used? And should people be rewarded for giving all of the data that insurers want? And should people be punished if they don't want to give over all of their data? Punished in the sense of having to pay a higher premium or not being given insurance. So these are really quite fundamental philosophical, ethical issues. So it's going to be a hot topic for many years to come. So thank you very much indeed, and thank you for your attention.